and you've got Palantir trading at 250 times earnings, 225 times cash flow. Nvidia's trading at 55 times cash flow.
Those skyrocketing valuations have many investors bracing for a potential AI fallout.
Bubbles don't burst because of high valuations. When they do burst, those high valuations make it worse.
Whether you think AI stocks will continue to soar higher in the new year, or if you think the AI bubble is ready to burst,
always want to be providing the so-called picks and shovels.
Marc Lichtenfeld with the Oxford Group shares some stock tickers for his bull case and bear case on the AI story, and shares his own personal and somewhat controversial strategy for finding stocks with value.
Wall Street doesn't like it. Half the analysts rate it a hold or a sell. I always like the stocks that Wall Street analysts don't, because they are very, very often late to the party.
Marc, so great to have you back on the show. We love having you visit, and especially when we have kind of a big week to talk about, and that is what's going on in the AI sector, specifically in those semiconductor and chip stocks. It's been kind of a rough week, Marc.
Yeah, I think people are getting a little concerned going into the end of the year about these lofty valuations, and then we just saw some news where Oracle lost one of its funding partners who has traditionally brought in lenders to it. The market seems to be a little freaked out. And I think we need to acknowledge that it really is only a little bit. It's not like the markets are tanking and crashing. It's just down today a bit on the news. So, certainly not a great day and great response to the news, but it certainly could be a heck of a lot worse.
Yes, we're not just talking about a one-day trend here. In this video, we're really looking ahead to what investors can expect for the new year in 2026 when it comes to AI stocks. And we're kind of looking at it from both angles. Are you AI boom or are you AI bust? That's the question a lot of investors have right now. Everybody's talking about an AI bubble. So Marc, before we get into the names of stocks you have for us today, let's just talk about where you stand on the AI bubble discussion.
Typically, bubbles don't burst when everybody is talking about the possibility of the bubble bursting. That's usually not when it happens. When the bubble bursts is when everybody thinks it's only going to go up forever. There's nowhere else to make money. If you look back at the dot-com boom and bust, sure, valuations were high, but it's all everybody was talking about at that time. Cab drivers, we didn't have Uber back then, so cab drivers were giving you stock tips, and everybody you talked to was giving you stock tips. People were quitting jobs, professional jobs, lawyers, doctors, to be trading internet stocks. That's when bubbles burst, not when everybody is worried that the bubble is going to burst. And the other thing I would say too is about valuations. Valuations are absolutely stretched, no doubt about it. If you look at some of the numbers, and you've got Palantir trading at 250 times earnings, 225 times cash flow. Nvidia's trading at 55 times cash flow. Those are absolutely very high valuations. But bubbles don't burst because of high valuations. When they do burst, those high valuations make it worse. It certainly makes those stocks fall a little bit harder. But you typically don't see people sell stocks just because they're expensive. Very often, in fact, they just continue to buy them.
Yeah, that's absolutely what we've seen the last year. And I think that's kind of true of a lot of stocks that we're talking about. One complaint we hear from viewers all the time is, why are you talking about this stock when it's at the top of its 52-week high? We want to hear about these stocks before they pop. I'd love to have you just explain a little bit more about when you're looking at stocks, do you care about where that stock lands on that 52-week high, or how high priced a stock might be at the moment?
I've heard also from so many of our members who ask the same thing, should we really be buying this at 52-week highs? And I always say, well, you could have said that last year when it was at 52-week highs, and 2 years before when it was at 52-week highs. Typically, strong stocks stay strong. And if I'm not saying that you chase valuation, you chase stocks higher, but if you find a stock that you like, whether it's from a technical perspective, because let's say it's in an uptrend, or because of its fundamentals, I wouldn't let the price be such a big factor unless you are concerned about valuation and you're trying to take, let's say, a more defensive standpoint. But other than that, I really wouldn't worry about it, because you could look at a stock like Nvidia that is trading at a high valuation, and a year ago it was trading also at a high valuation, maybe a little bit lower, but just because the stock's trading at 50 times earnings doesn't mean it can't get to 60 and 70 while things are still kind of running higher in a bull market.
I think that's really great advice for investors to remember. And such a good point. Last year at 52-week highs shows just how much growth has happened for a lot of these different companies in the last year, especially in that AI sector. But the stocks that you have for us today and the areas that we're talking about for this video are really kind of presenting a case for whether you're pro AI, you really think that AI is going to continue to grow, that market's going to do well, or whether you're kind of skeptical on whether that AI bubble is going to burst soon, and a safer way to invest if you're worried about that AI bubble bursting sometime soon. So we're going to talk about both cases and both ways to invest in this video today. Let's start with that pro AI. If you're somebody who thinks that the investment in AI is just going to continue into the new year, what area are you looking to invest, Mark?
Well, I always want to be providing the so-called picks and shovels to whatever industry is booming. So back in, the dot-com days, I wasn't interested in investing in pets.com. I was more interested in the Cisco's, the providing that backbone infrastructure. I want to own the companies that are providing all that power that these AI companies need. We know it's a pretty well-known story at this point that these data centers just gobble up energy, and somebody has to provide that energy, and the ones that do are going to make a lot of money for the company and for their investors. So the company that I really like to do this is called Black Hills Corp. It's not a super well-known one, although you may know it, being in South Dakota. But the ticker symbol is BKH. They're also acquiring another company called Northwestern Energy. It's going to add about 800,000 customers. So they're an electric and natural gas utility. But what I really like about them, they service customers in Wyoming. And right now, Cheyenne, Wyoming, and some other areas of Wyoming are becoming a bit of a boom town for these data centers because the land is very cheap and the electricity is very cheap. And a really cool thing about this company is they were expecting 5 to 7% earnings growth, not including the data center business. So now you add the data center business, and you could have some really strong growth, which is not something you normally see with a utility, especially an electric utility. They've raised their dividend every year since 1971, which I really like. It's got a solid dividend, about 3.8%. Their customers include Microsoft and Meta. So this is not, they're not just hoping that somebody shows up and builds a data center. These things are actually happening here. So I think it's a great way to play AI and get a really nice dividend yield, which, as you know, is something that I'm always a big fan of.
Yes, we're going to get to your dividend strategy and actually share 12 other stocks that are topping your dividend list right now a little bit later on in the video. So stick around to the end of the video to get that really important discussion too. But I love this stock idea because, like you said, it's one that most people wouldn't know. I have for sure heard of this. Again, MarketBeat's headquartered in South Dakota. So I've heard this name many times, and Northwestern Energy as well. And I think it's such a unique way to look at investing in energy because so many of these data centers are going up in these rural areas, like you said. I know there's already several in North Dakota. I know there's discussions underway about potential data centers happening in different parts of South Dakota and Wyoming, like you mentioned. So buying the energy right where those data centers are being built just makes sense. How much of an increase do you think data centers could have on a relatively small rural energy company like Black Hills?
It's really hard to say at this point because we don't know exactly how many of these big customers they have. But as I mentioned, they have about 5 to 7% expected earnings growth before the data centers. So over the long term, it certainly could add several percentage points in earnings, if not much more. Even though utilities are considered somewhat defensive and this is a dividend play, I think this is actually a growth story. So I think it's kind of a rare bird in that sense.
Yeah, again, a really unique stock and not a name we've ever covered on the show, and probably a name many investors have never heard of before. One area of risk that just comes to mind for me when we're talking about energy companies, especially traditional energy companies and the AI data center boom, there's a lot of discussion about those small nuclear reactors being used to power data centers in the future. Would that impact a regular company like Black Hills Energy if that small nuclear reactors become the way to power these data centers in the future?
Perhaps, but I do think that we are a long way off from that. So, one of the things about these data centers, the numbers are just so large. And as AI continues to improve, I'm sure you've noticed it too, just the difference between let's say ChatGPT today versus 6 months ago is pretty astounding. I actually didn't use it much 6 months ago because I didn't find it particularly useful. Now I find it indispensable. So as it continues to grow and the power needs become greater and greater, basically, we're going to need to find power from everywhere that we can, whether that's oil and gas, electricity, solar, nuclear. So yes, will the small modular reactors be important someday? I think they will, but so will everything. I mean, it's kind of going to be all hands on deck to power these data centers.
Yeah, that's a great point, Mark, about the more use people have for AI, the more AI is used, the more power is needed to meet that demand. So I think we're just going to continue to see that energy demand, like you're saying. A really great first stock to talk about. Now let's switch gears. That's a pro AI outlook. Let's look at that more hedge against AI
Mhm.
and what might happen in the future. What are your thoughts for that direction?
Yeah, so if you're concerned about an AI bubble and you want to have a stock that's really positioned very defensively, a name that I love is Nutrien, ticker symbol NTR. This is a Canadian potash company. Regardless of what's happening in AI, people have to eat. And so, in order to boost crop production, you need potash, you need fertilizer, and that's what Nutrien does. They're one of the largest in the world. They have about a 20% market share. They're essentially immune from the effects of tariffs. The CEO, when the Canadian tariffs were first put on, didn't blink. He said, "We're just going to raise our prices to our customers," which unfortunately are American farmers. But from an investment standpoint, farmers have nowhere else to go. It's not like there's a million potash companies and they can take their pick. It's not a very competitive market. As I said, they own 20% of the market. So their pricing is pretty stable. It's only going to go higher if tariffs increase. If tariffs come off, then yeah, the pricing will come down a little bit. But they're not going to be affected by it. And interestingly, when President Trump was levying the tariffs and kind of going after Canada specifically, this stock didn't blink. It continued to perform very well. It was very much a contrarian idea in that you'd think you'd want to stay away from Canadian stocks, but it performed really, really well this year. It's up over 40% on the year. It's got a 3.5% yield. Has raised their dividend every year since 2018, and it's cheap. It's trading at 13 times forward earnings, just 1.2 times book, 7 times cash flow. And as a reference point, generally speaking, anything under 10 times cash flow is considered a bargain. And Wall Street doesn't like it. Half the analysts rate it a hold or a sell. And I always like the stocks well, I shouldn't say always, but I prefer stocks that Wall Street analysts don't because they are very, very often late to the party. And so they typically will not get on board with a company until the stock has started rising and they realize they're missing the boat. That's when they all pile in with their buy rating. So I never let a sell rating or a hold rating phase me. And when I see a lot of them, it actually inspires me more for the stock, or gives me more confidence because those upgrades can actually power the stock higher. There's more catalysts possible when analysts really don't like the stock.
Okay, that is really interesting to hear you explain that rationale a little bit. I love that. Very interesting perspective. Let me know in the comments what you think about that one too, about that perspective on investing in analyst ratings. Lots more to dive into on this one. Explain a little bit more about how this is kind of a contrary AI pick. I think you said already, everybody's going to need food regardless. Do you think that AI maybe won't impact the agriculture field as much, or other ways that this stock in particular would be kind of immune to whatever's happening in AI?
I know that farmers, and especially industrial farmers, are using AI to improve their yields, become more efficient. No doubt about it. But if you're looking for something, for an investment that's really outside the scope of AI, in case there is an AI bubble crash, then I think this is kind of one of those plays. But to your point, if the farmers are using AI and are able to increase their crop yield, well, that's positive for this stock too. So, I really think this is a very, very defensive play where, you kind of win if they do use AI, and then if the AI bubble bursts, it's a really safe play in that it's cheap, it's got a great dividend yield, and it's AI is not a meaningful part of its business, and really shouldn't be anytime in the future. Like I said, everybody has to eat. The world's population is growing, and so we have to find a way to feed it, and this is this is what they do.
Yeah, such a great point. Everyone really does have to eat. And that seems like a pretty strong moat for this company to have some future growth potential on the horizon. I think that is something a lot of the companies on your list of your top 12 dividend stocks have in common too. We're going to get to that in just a minute. But first, I want to share which of these two companies I want to add to Bridget's buys. Both are great, unique names we haven't really heard of before, but I'm going to stick with the South Dakota name here simply because we rarely get to talk about companies from South Dakota. So I'll be adding Black Hills Energy to my watch list. If you want to check that out for yourself, you can go to marketbeat.com/Bridget and see which other names I've added to this watch list that all come from the videos we share with you right here on YouTube. Marc, thanks again. I really appreciate the two unique names you brought us. Definitely names a lot of our viewers probably haven't heard of or really considered before. I also think a theme that really stood out when we were talking is you like dividend stocks. I
Mhm.
know from our prior conversations, that's something you do too. And you have a free list for some of our viewers today for 12 other dividend stocks to look at. What can our viewers find in that list?
These are 12 dividend stocks that I love. And as you may know, I wrote a book that was an international bestseller. And in that book, I lay out my strategy for investing in dividend companies, which is basically it's dividend growth companies and companies that are growing their dividends by a strong enough margin so that it really allows compounding to kick in and accelerate. And that's what it's really about is owning companies that are raising their dividends every year. And that way, you're getting paid more every single year. You're increasing your buying power. So even if inflation turns higher, you're maintaining and increasing your buying power. And then, as far as the stock market's concerned, having that dividend, and especially if it's growing every year, gives you a nice little buffer so that if there's a bear market, and someday there will be, I'm not calling for one anytime soon, but there will be one eventually someday, that does ease the pain a little bit. If the market falls 10% and you're earning 5 or 6%, that makes that bear market a lot easier to handle and to stay in the stocks without having to feel like you need to cut everything loose. On the flip side, when the market is strong, you're getting that extra 4, 5, 6%, whatever, which boosts your total returns. And if you're in there long enough, then those yields are even higher. You can earn 8, 10, 12% over the long term just in dividend yield if you stick with these stocks that are compounding their dividends every year.
Yeah, you make a really great case for making sure that your portfolio is diversified with more of these dividend stocks. If you want to learn more about dividends or take a look at this free report of the top 12 dividend stocks that Marc and his team are looking at, you can scan the QR code or click the link that's right in the description. It'll take you to that free report. You can get a little bit more education and research on these companies and find out if dividend investing is something that you want to look into more. Marc, thank you again so much for your time today and for going through some interesting stocks for our viewers today. I really appreciate it.
Oh, my pleasure. It's always great to see you, Bridget.
Yes, you too, Marc. All right. Thanks for watching, everyone. Let me know what you think in the comments. And as always, happy investing.